Hey guys, Stock Saturday, and it's been quite a good week for me. About 6.5% up, or £16,000, which compared to the market, just looking at the S&P, it's down basically flat, down 0.14% for the last 5 days, and Nasdaq is down 1.5%. So yeah, not the best week in big tech, but of course it's still marching on the long term. It can have 1 week off. Yeah, it's been largely down to gold miners and Cleanspark as well. Not just Cleanspark this week. Had sort of one or two other reasonable gainers. It's Taiwan Semiconductor sort of starting to push ahead. I think it's over 50% green now for me with the FX included. And Stellantis, another sort of couple of percent this week, 2.5%, I think. So still motoring on. Very nice. And speaking of Taiwan Semiconductor, we had the February revenue numbers come in. February sort of normally not the best month, so it was sort of quite a bit down on January's figure, $34 billion in Taiwan dollars, but that is 11% up year on year. So it's sort of cyclical nature. I always wonder how which month the Apple numbers would actually come into. Obviously, that's their biggest customer, but you have rising, potentially greatly rising Nvidia demand now. So yeah, its numbers are going to be sort of all over the place, but I think we look for a reasonable year-on-year change. So yeah, that was good. And then we got the Broadcom first quarter results, and this sort of wasn't quite as bullish enough for the high prices that we were at, sort of $1,400. It came off a little. I think it's ended around sort of low 1300s, but obviously that's way up from not too far ago. And yeah, the sort of headline figures, revenue up for the first quarter, up 34%. This is including the VMware acquisition, and that acquisition is sort of driving a lot of the not so good numbers. Net income 1.3 billion compared to 3.7 billion last quarter. So a lot of this is sort of write downs and you know I think they sort of call it digesting the VMware acquisition. It's sort of a big python like eating a eating a pig. Like it takes time to sort of get through it, and you do sort of write downs and go through it, realize exactly what is worth what's worth, and you have to write some stuff down that goes on to sort of net income, even though it's a non-cash item. So yeah, in a few quarters, I think we'll see what is really happening. And they have reiterated what they had said before for this year, looking at $50 billion of revenue and 60% adjusted EBITDA guidance. So I don't know, maybe people also were hoping for increased numbers now with sort of Nvidia increased guidance and just the whole AI sector doing well. Maybe people were sort of wanting more revenue and more profit, but this looks fine. And yeah, they just need to sort of get through the VMware write-offs and see how things really play out. And just looking at the balance sheet, obviously this has drastically changed with the acquisition. Cash a little bit down actually, about sort of 2.2 billion down in cash, although you've got some sort of other current assets and receivables and everything all changing around a little bit. An enormous increase in goodwill, of course. Intangible assets as well, up to 47 billion from 3.8. So yeah, big changes, and there'll presumably be more write-downs over time of some of this goodwill and yeah, non-cash items. Long-term debt has increased from 37 billion to 73. We knew that obviously that was going up. Other long-term liabilities going up as well. So they've said they're going to use some of the profits from the increased revenue to pay down some of this debt, as they call it, digesting the acquisition, get that debt down again. and this is the Broadcom way. So overall, pretty good. I thought if you sort of strip out some of this acquisition-related stuff, it's just slightly under $11 earnings per share for the first quarter, and a continued $5.25 dividend. I think that was the same as last month. I expect that'll probably increase that towards the end of the year, and yeah, looking pretty good. See if we can achieve this 50 billion and 60% EBITDA. So looking at Vale's results, it's looking sort of pretty good on revenue, up to 13 billion. This is sort of largely increase in volume and price of copper and iron ore, mainly the iron ore, of course. Adjusted EBITDA up to 6.3 billion from 4.6 this quarter last year and 4.1 in the previous quarter. So all looking rather nice. Slightly down for the whole of 2023 from 2022, but that was a blockbuster year. And yeah, 49% EBITDA margin for the quarter. Pretty good, although they have had a one-off, looks like court case decision for an issue that happened in the Brazil mine. So they've had to sort of well, not similar to the Brumadinho. They've had to sort of put aside a set of money for dealing with that. But it's a one-off charge, of course. So yeah, they sort of do this adjusted EBITDA and take it out. Obviously, it's still going to be an expense. So if you come down here to their net income breakdown, you can see how they get from net income to adjusted EBITDA. You've got obviously income tax and depreciation and that sort of thing, but you've also got a 1.17 billion sort of one-off charge for this mine, a tailings dam burst. So it's unfortunate. It was a long while ago. And yeah, they've sort of come to the decision in January from the looks of it. So yeah, that's not the end of the world. Looking at their capex as well, this is sort of quite a bit up from last quarter and previous years as well, slightly up from 2022. And this is going into on the growth side, iron ore. Surprisingly, I thought they would be sort of pushing more on the copper side, but yeah, looking at a little bit in nickel and copper, sort of energy transition materials in total, up 4.5%, but yeah, 17% on iron ore. Obviously, we're still going to need an awful lot, and sustaining capital increased in across the board, really. And I like the little performance by segment breakdown, just to sort of see what's doing well. Iron ore, of course, still the major one. 9.2 billion in revenue for 5.4 billion of EBITDA. So that's pretty good. Sort of 60% or so. Pellets, similar. And then sort of energy transition materials, nickel. 1.17 billion in revenue for just 152 in EBITDA, so that's not particularly good. Nickel sort of having a really tough time of it at the moment. Copper 855 million for 375 million in EBITDA, so not too bad. Sort of 40% EBITDA adjusted EBITDA margin. So yeah, pretty good. Keep pushing the copper. But obviously iron ore is the big one. Yeah, not too bad overall. Price hasn't been sort of doing particularly well at the moment. They're sort of having a little boast about how much value creation and distribution they're doing. Sort of 2.4 billion in dividends in March 2024. So not too bad. Get a nice dividend and a little bit of buybacks, although they do seem to do a lot more dividends than buybacks. But yeah, it's not too bad. It's one that I'll probably push a little bit more money into in the future, although I probably will be looking more still on the copper side rather than sort of obviously Vale and Rio Tinto are more iron ore focused. And then we got Fortuna Silver Mines, one of my sort of smaller gold and silver holdings. They're not really Fortuna Silver anymore. It's more like Fortuna Gold. But yeah, it seems like we need one more quarter for sort of reasonably good numbers to come out. It's more of a sort of a write-off, non-cash item issue this month. Just looking at their sort of headline numbers, sales up 61% for the 3 months compared to previous year, to 65 million. And they had a sort of a write-off because of one of the mines closing sooner than expected. I knew sort of their silver mine in Mexico was sort of coming to the end of its life, and that is sort of the bulk of their silver production. So they really are going to be Fortuna Gold pretty much. Their new mine in Segala is all gold, and yeah, that'll be sort of where they are going forward. So they had a bit of a write-off, impairment charge of 90.6 million. Anticipated closure of the mine in late 2024. Was expected to be mid 2025. So yeah, a few other sort of write-downs, but on a sort of free cash flow basis, I think they've noted that 66 million in free cash flow compared to 4 million last year. Obviously, they were sort of having a fair bit of capex in previous years, 23 million just for that quarter in 2022, and nothing now. It's sort of pretty much finished, and it's just sustaining capex. So yeah, rather nice. And this has really helped the new mine bringing all-in sustaining cost down. It's $1,509 now, down 4% from last year at sort of 1579. So at a time where gold is pushing new all-time highs, pushing past new all-time highs, 2180-ish, I think, dollars gold. The sort of $1,500 all-in sustaining cost makes them very, very profitable. So a lot of other gold stocks people are bullish on, me included, sort of things like Equinox, building out their mine and now finishing their mine. A lot of other people seem to be interested in sort of still more exploration, penny stocks. Like, I always think if gold price is at all-time highs, you want to be selling gold right now, as sort of Fortuna are, rather than, oh, we've got a deposit and we'll have a mine ready in 2 years. Gold price could be down by then. So yeah, I think sort of this free cash flow should start to make its way to investors, and you sort of see I don't know what they'll do, a buyback, or maybe buy a new mine, or buy a project, or sort of a large dividend, a special dividend. Then I think you'll start to get a bit of focus on Fortuna a little bit more than they've had. And they have noted they've already been using some of this cash to pay down the debt, which was good. Repaid $41 million of its corporate credit facility in the fourth quarter, and an additional payment subsequent to the year end of $25 million. So that's pretty good. And total net debt for the year end stands at 83 million. So I think that's 200 million of debt and 120 million of cash. So pretty good. Keep paying that down with free cash flow, and yeah, they can start sort of divvying some of it out. So we'll have to see. They've got their consolidated production and cost guidance for 2024. So we get one more year of the San Jose mine, 3.3 million of silver and a little bit of gold. It's a fairly sort of crappy silver price, so it's not particularly profitable unless that rockets up in the short term. And then we've got the Peru mine, 1 million ounces of silver, so not too bad, slightly better silver cost. And then yeah, the three gold mines. The Yaramoko mine is a little bit shorter life, so that won't be too long for this world, which is a bit of a shame because it's the very low cost, almost as low as Segala, sort of 1270 all-in sustaining cost, but with the all-time high gold price, that should provide a nice bit of cash for the next couple of years, and Segala sort of being very, very low cost for the next 10 years or so. And the Argentina mine is sort of much higher cost, 1800, so, but yeah, that's longer life. So yeah, I think they should, certainly for this coming year, huge numbers, sort of 350,000 ounces of gold and 4 million of silver, at least this year. They should hopefully have a large special dividend. So, economic news for the week. We had sort of fair few bits and pieces. The ISM non-manufacturing PMI, the big bellwether, was sort of slightly down from previous month and a little bit lower than expectations. Sort of weighed on things a little bit. Employment sort of down, most things down really. So yeah, that had a bit of a knock. The ADP non-farm employment numbers was a little bit lower. But again, contradicted later on. House price index, slightly lower than expected, but these are sort of contradicting each other. Nationwide sort of saying it's all going pretty well. Mortgage rate still 7.92%. That's ridiculous. Stay off your standard variable rates if you can. EU interest rates meeting unchanged. Obviously, I don't think anyone was expecting a change. Didn't really see whether they were sort of talking hawkishly or dovishly, to be honest. And then job numbers, sort of, or unemployment numbers, not really too bad. Still sort of hovering around the same range. But then Friday, the non-farm payrolls was higher than expected and higher than previous month. But they're sort of still making adjustments to previous months as well. So higher job numbers, but also higher unemployment. A little bit strange, but yeah, it doesn't seem to be sort of too much reaction to this. Did sort of have a jump up in gold on Friday, but yeah, don't know whether that was related. So yeah, overall, not too much to sort of get excited about. And then, yeah, portfolio-wise, as I say, it's sort of the Trading212 ISA that is really pushing things. Cleanspark back above $20. I think it went down in after hours, so yeah, maybe back down on Monday, depending on where Bitcoin is. But the miners starting to do pretty well. Kur mining above 3. Equinox sort of pushing 470. It's sort of strangely enough being all gold. It's not pushing too high on the really high gold price. Fortuna though 3.24%. Yeah, so these were all a mix of sort of 5% up, 7% up, and yeah, Kur mining I think doing a bit better than that. REITs sort of not really moving all that much, even though we did get the budget on Wednesday. UK REITs sort of potentially getting a bit of push. We got the British ISA, so yeah, not a lot of details on it yet, but 5,000 extra to put in an ISA, which I will be certainly making use of. Don't know sort of what I would do with it. Maybe just transfer. I don't imagine Trading212 are going to be able to offer it. Certainly not straight away. But yeah, maybe just transfer sort of Glencore or Rio Tinto or something in there, and yeah, go from there. But yeah, potentially a little bit of push towards British stocks. What do we get in the Interactive Brokers ISA? Sort of things not really moving all that much. Slight push for Pan American Silver. KGHM as well is sort of, if we get a bit of crypto money coming off the table sort of over the next year, I was wondering whether to actually go the Interactive Brokers ISA for this coming year rather than Trading212 and maybe sort of put a reasonable amount more in for KGHM. Sort of copper market is looking pretty good over the next sort of even the next year as well as the next few years, where sort of it was looking like this next year might not be so good. So a huge copper position and a huge silver position. It's sort of what drew me to KGHM, and yeah, I might be adding to that. It's down from my average price, and all looking good. So we'll see. And on the invest account side, Chinese tech sort of not moved at all. On the option side, though, really pushing on. This is where sort of some of the gain has come from. Cleanspark up a little bit. I think the 98% is sort of completely wrong because sort of sold part of the position. That's like, I don't know, 500% green or something. But the gold and silver miners starting to sort of push on with this slightly higher. You know, it doesn't take much of a move in the stock prices for the options to really move up. Himax especially. I mean, this was sort of £2,000 sort of a couple of weeks ago, really. And yeah, all of a sudden 4,400. So incredibly volatile, but we'll see where we go sort of in the next year. Obviously, these are Cleanspark, Equinox, and Cura and Himax, basically all end of 2025, where Fortuna is the end of this year. Yeah, end of this year. So that's a bit of a gamble. But we'll see where we go. They're getting a lot of cash, of course, and still, yeah, £500 in uninvested cash. Not 100% sure whether to sort of pile in and add a little bit more. I still think the Equinox options are looking fairly attractive. If we do sort of get this push in gold price, I think by the end of next year they can do really well. So I've got a bit on the sidelines I could be adding, and maybe put this 500 quid in as well. So we'll see. So leave your thoughts in comments below. Let me know how you guys are doing, and if you're buying anything at the moment, and like and subscribe. See you soon.